Good evening, everyone, and my name is Wakar Khan, and I'm the Equity Research Analyst at William O'Neill India, and I welcome you all to this week's Market Wrap. Without taking up much time, let's start with Nifty's chart analysis for the week. During this week, Nifty gained by 2.6%, but remained highly volatile by oscillating between its highs and lows. We started the week with markets in downtrend and day one of the attempted rally, as Nifty had created a potential bottom of 15,183. And on Monday, Nifty managed to stay above this low for second consecutive day. So we marked Monday as day two of the attempted rally. On Tuesday, after gap up opening, Nifty traded in the positive territory for remaining parts of the trading session and managed to close nearly 1.9% above Monday's low. The short-term moving average of 10 EMA acted as a stiff resistance during the trade, and Nifty retraced slightly from today's highs on Tuesday. Nifty managed to stay above its recent lows for third consecutive day, so we changed the market status to rally attempt. Now we require an FTD, that is an up move of 1.5% or higher on volumes higher than the previous day to take the markets to confirm uptrend. On Wednesday, after a muted opening, Nifty traded lower as it came under selling pressure and closed 1.4% lower during the day. The only positive was that the recent lows was not breached. On Thursday, post a tepid start, Nifty raced higher and again found resistance near its 10 EMA. Hence, the oscillation in Nifty's move continued, and Nifty ended the day 0.9% higher. On Friday, Nifty gapped up and opened above its 10 EMA, which was a positive sign, and managed to close above the 10 EMA and higher by 0.9%. But an FTD did not occur, hence, a quest for the FTD continues. Now, let's discuss how developed market indices across the globe are behaving in terms of their market status to understand the broader picture in detail. 4 weeks ago, 16 developed markets were in confirmed uptrend, only one was in downtrend. As the weeks progressed and markets across the globe came under selling pressure, the count of markets in confirmed uptrend started reducing from 16 to 5 and currently is standing at 1. Markets in downtrend had increased to 20 in the last week, but 12 markets have managed to create a potential bottom and are searching for an FTD, and 9 markets are still in downtrend. Now let's see how the emerging market indices across the globe are placed in terms of their market status. 4 weeks back, 15 markets were in confirmed uptrend and only one market was in downtrend. The count of markets in confirmed uptrend reduced to 8 in the next week and is currently standing at 5. On the other hand, markets in downtrend increased to 2 in the following week, then to 13 and is currently standing at 15. Currently in the emerging markets, the only market in rally attempt is India. But markets around the globe have remained choppy and volatile, and the fear of an FTD coming in and failing remains on the cards on account of global macroeconomic pressures. Now let's talk about some key events highlights. UK's inflation number, Brent crude oil prices, and Jerome Powell's testimony were the key macro events that dominated global markets during the week. Britain's inflation made a new 40-year high in May as it touched 9.1% as Russia's war in Ukraine drove food and fuel prices higher. The increase was in line with market expectations and signals no quick end to the cost of uh, living squeeze faced by the UK citizen. Bank of England says inflation can hit 11% in October when cap of domestic energy bills is raised. As we had discussed earlier as well, inflation is soaring worldwide and US inflation has surged to 8.6% in May, the biggest jump since 1981. And European Union economies saw a record 8.1% increase in the month of May in inflation. Crude oil prices have come off their recent highs and declined on the feet of the possibility of a recession in the global economy, following aggressive monetary policy tightening by central banks and the likelihood of weak demand outlook for crude oil. Moreover, COVID-led lockdowns in parts of China too led a decline in prices. Brent crude oil had touched a low of 108 per barrel and is currently trading around 110-111 per barrel. Jerome Powell, in his latest testimony, said the pace of future rate hikes will depend on whether and how quickly inflation starts to decline, something the Fed will decide on a meeting by meeting basis. Recession is a possibility in the US, according to Jerome Powell, which is not the intended outcome, but can happen in future. With inflation at 40-year high, the Fed policymakers also forecast more accelerated pace of rate hikes this year and next year than what they had predicted 3 months ago. with its key rate reaching 3.8% by the end of 2023. That would be the highest level in 15 years. As the inflation across the globe continues to remain elevated on account of steep commodity prices, logistics problem pertaining has led to global central bankers, including RBI, hiking interest rates and squeezing off excess liquidity from the system to control the inflationary scenario. In these times, Nifty chart becomes even more important to help us gauge a direction through these turbulent times. Nifty is trading well below its long-term key moving average such as 50 and 200 DMA, which is not a good sign. A follow-through day is still awaited to take the markets to confirm the uptrend. If Nifty is able to reclaim its 50 and 200 DMA in future, and if FTD is established, the rally can be sustainable. But if markets remain volatile and choppy, the failure of an FTD always remains high. On the flip side, if market breaches its recent lows before staging an FTD, then market will be moved back to downtrend. Thank you guys, and now is the time to take a break and enjoy the weekend. Hope you found this week's market wrap informative. Stay safe and stay healthy.